Every civilization that has risen to power has relied on money, but money, by itself, is limited. Coins, notes, digital digits, they can be counted, stored, and spent. Yet, across history, one invisible force has consistently outstripped money in power and influence: debt. Debt is more than a financial instrument. It is a tool of control, a weapon in wars, a mechanism for empires to expand, and a method for rulers to ensure obedience. Its power lies not in its physical form, but in the obligations it imposes, the leverage it creates, and the consequences it delivers. Where money can be hoarded and spent, debt grows, it multiplies, it binds, and it forces action. Understanding how debt came to surpass money itself requires a journey through empires, wars, banks, and human psychology. The story begins in ancient Mesopotamia. The first records of debt date back over 4,000 years to Sumer and Babylon. Farmers borrowed grain seeds before the planting season, promising to repay with harvest. Temples and rulers issued loans in silver or grain, and interest quickly became a central feature. Debt was simple then, but its power was immediate. A farmer who could not repay risked losing his land, his freedom, even his family. Debt created a hierarchy of control that money alone could not achieve. Wealth could be stolen, destroyed, or devalued by kings, but debt created a system of obligation that bound people across generations. Families could be ensnared in cycles of debt that extended for decades. Money could be spent and gone, but debt remained, growing silently, often exponentially, shaping human behavior long before modern banks existed. As civilizations advanced, debt became a tool for rulers and empires. In ancient Rome, the state and elite families lent money at interest to peasants and allies. Wars were funded not by the immediate collection of taxes, but by loans that promised repayment from future conquests or tributes. Roman debt laws allowed creditors to seize land and even enslave citizens who failed to repay. The Emperor Augustus famously centralized debt to strengthen imperial control, understanding that a citizen indebted to the state would act differently than one free of obligations. Here, debt surpassed money. It did not just represent value, it represented compliance, discipline, and predictability in society. The Middle Ages brought new forms of debt and new institutions to wield it. Italian city-states like Florence and Venice became banking hubs, lending to monarchs and funding wars. The Medici, in particular, perfected the art of debt as power. They loaned money to kings and popes, extracting influence far beyond what their cash reserves could buy. A loan could dictate policy, control armies, and shape economies. The bourgeois, desperate for funds, was effectively tethered to the lender's will. Money could exchange hands, but debt established hierarchy, obedience, and leverage. When the French king defaulted on loans, the Medici and other financiers acted not only to recover funds but to protect their influence, demonstrating debt's dual role as currency of power and authority. Debt's influence expanded even further in early modern Europe. Governments realized that instead of raising taxes upfront, they could borrow against future revenues. England, for instance, created the national debt in the 17th century to fund wars against France and maintain a standing army. Bonds were issued, interest promised, and citizens alongside wealthy financiers became stakeholders in the nation's obligations. Citizens holding government debt were not merely investors. They were participants in the nation's survival. Debt tied the economy, the military, and social order together in a web that money alone could never achieve. When war loomed, England could call upon the private wealth of lenders without immediate taxation. Debt became a lever that allowed nations to expand, fight, and endure beyond the limits of their current resources. The Industrial Revolution amplified debt's reach and subtlety. Private companies, banks, and stock markets grew, and debt became layered, complex, and nearly invisible to ordinary people. Railroads, factories, and enterprises were built on loans. Investors who understood leverage could multiply returns far beyond what money alone could achieve. But for the workers and the poor, debt often meant dependency. Mortgages, rent-to-own schemes, and personal loans ensured that laborers were tied to their jobs, their wages, and their obligations. Even as money flowed, debt controlled decisions, actions, and freedoms. The invisible chains of debt became stronger than the coins in one's pocket. Modern finance perfected debt as a tool for influence and expansion. Banks don't just lend money, they create it. When a bank issues a loan, it does not hand out existing deposits. It generates new money in the form of a liability, simultaneously creating an asset and a debt. This ability to conjure money backed by repayment obligations gives debt unmatched power. A dollar loan today can become 10, 100, or 1,000 in influence, depending on how the borrower uses it. Corporations and governments are ensnared in systems where debt drives decisions, policies, and strategies. Countries borrow in foreign currencies, citizens take on mortgages, and students sign decades-long obligations. The system grows more potent with each obligation created. Money moves, but debt anchors, it binds, and it expands influence silently. The 20th century provided vivid examples. After World War I, Germany was saddled with reparations that created unsustainable debt. Money printed to pay debts caused hyperinflation. Savings evaporated, but debt obligations dictated political movements, contributing to the rise of extremist regimes. In the United States, the Great Depression demonstrated that even in economies flush with currency, debt could amplify misery. Mortgages, loans, and corporate obligations turned economic shocks into crises of survival. Governments realized that controlling debt, who owes, who pays, and who is forgiven, could control populations. Debt became a mechanism of governance, social engineering, and economic manipulation. In the 21st century, debt has grown beyond imagination. Global debt exceeds $300 trillion. Corporations leverage borrowings to manipulate markets. Governments issue bonds that determine monetary policy, interest rates, and inflation. Central banks, once mere regulators, now manage debt as a primary tool to steer economies. Even individuals are conditioned to borrow. Mortgages, credit cards, student loans, personal loans. Debt is embedded into the very structure of society, shaping behavior and outcomes in ways that money alone never could. It is not just a financial instrument, it is the ultimate instrument of power, more enduring than any coin, note, or digital currency. Yet debt is also a mirror of human psychology. It compels obedience, delays gratification, and forces planning. It creates hierarchies, redistributes wealth, and amplifies influence. Debt can be a weapon, a shield, or a ladder, depending on who wields it. History teaches that the one who controls debt rarely works for it, while the one who earns money often ends up paying for it. When empires collapse, currencies fail, or banks freeze, debt remains enforced obligations, unfulfilled promises, and leverage that shifts from one generation to the next. The lessons are clear. To survive and thrive, understanding debt is more important than accumulating money. Debt has become more powerful than money itself because it is persistent, invisible, and flexible. Money can be spent and lost, stored and stolen. Debt persists across time, obliges behavior, and multiplies influence. Debt can fund wars, reshape nations, control empires, and dictate lives. It transcends the mere physicality of coins or paper. It is a network of promises and obligations, binding rulers, states, and citizens alike. When wielded intelligently, it is creation. When abused, it is destruction. Every civilization that has mastered debt has wielded influence far beyond the reach of raw currency. Every society that ignored it eventually bowed to its unseen force. The story is ongoing. Today, in global finance, debt is more than numbers on a spreadsheet. It is leverage, it is control, it is the invisible hand behind wars, policies, and social engineering. Understanding debt is not optional, it is essential for anyone who wants to understand how money, power, and society function. The lessons of Mesopotamia, Rome, Florence, England, and modern nations converge on one point: debt outlasts money, outstrips it, and dominates it. Every coin has a limit. Every note can be devalued. Every currency can fail. But debt, once created, shapes decisions, influences behavior, and transcends time itself. In the end, money is finite. Debt is infinite. Money can be lost. Debt can be enforced. Money can buy goods. Debt can buy power. History has repeatedly proven that those who understand debt, leverage it, and navigate it survive and thrive, while those who merely accumulate money remain bound by the invisible chains they never see. Debt is not merely financial, it is the ultimate tool of influence, the quiet engine behind human civilization, and the most powerful force shaping wealth, power, and freedom.